As of November 18, 2024, natural gas markets are experiencing bullish momentum due to ongoing weather-driven demand spikes. The United States Natural Gas Fund, UNG, and leveraged ETFs like BOIL have benefited from colder weather, which has increased heating needs and temporarily constrained supply. Conversely, KOLD, which inversely tracks natural gas prices, has declined amid this upward price trend. Fundamentals remain sensitive to winter weather forecasts and production recovery after earlier disruptions, with analysts eyeing key resistance and support levels for near-term trading opportunities. G'day everyone, welcome back to another update for natural gas and the respective ETFs. And first we look at the trends of the natural gas price on the monthly, weekly and daily. So here on the monthly, it's still broken above its respective moving averages on the CCI and also the price moving averages. So bullish momentum at the moment. There's no divergence there on the monthly. On the weekly, likewise, bullish movement has been that way now since around September, start of September, and still bullish, and also bullish above the price moving averages as well. And again, no sign of a divergence there. Now, looking at the daily chart for a minute, you'll notice here we did draw this lower highs on the CCI, giving us a bearish divergence at that peak there, and that was at the previous point there. Now, what's happened since, the price has gapped up last couple of days, and we're going to extend that trend line to that new high. That's still a bearish divergence, because that low is still slightly lower than that. Sorry, that high is still slightly lower than that high. And likewise, we're going to extend that Fibonacci ever so slightly. It looks like it's approaching this key resistance at 31.94, and that's going to be a very small change to this target area between a 23 and a 38% level. So that's still expected to break to the downside at some point, so long as this CCI remains below that previous high there. So again, since about late or start of October, there's been a bearish divergence in play. Now, if we go to the intraday charts, you can see it more clearly, that gap up. And there's a major gap up since our last video. Now, we did have a bearish divergence back here, a smaller term. These divergences, by the way, for those new to the channel, are independent on different time frames. They don't always relate. You can see here we had one bearish divergence there. It broke down, hit our target, and now we've got another bearish divergence which broke down, hit its target. And I mark the targets with these rectangles, and those target ranges are identified with the Fibonacci range. So if I draw it out on this one, for example, I'll take it back to the significant low before that divergence started, and that was a 23-38% level of a target. That's a minimum target range. It hit it and it bounced out of there, and now we had another break to the downside, hit that little target area through those bearish candles, and it's been, in this case, it's actually broken down around a 61% key Fibonacci area. So that's a key area. Had it broken a lot further down from there, then we would have seen more than likely further declines. But at the moment, we're still seeing bullish momentum. Now, in terms of trading, entering and exiting a trade, again, for those new to the channel, we go long. First of all, we trade in the direction of the higher time frame. So if you're trading on the hourly, for example, you're trading in the direction of the daily. Or if you're trading on the daily, you're trading in the direction of the weekly, and so on. So in this case, on the hourly, we're going long trades only, no short trades. So you would have avoided going short during this period, even though that would have been a nice gain. But again, we avoid breaking the rules. Here, we would have gone long when that CCI broke above its moving average, enter the trade, and you close the trade when that CCI enters the moving average range. So it's still in play. Looks like it's about to touch that in the coming maybe hour or two. And as soon as that touches that moving average range, we close it out. That's the exit for the trading strategy. For BOIL, on the trends first, on the monthly, still very bearish, below the moving averages. There's no CCI for the monthly. On the weekly, bullish divergence versus lower lows on the price, and there's still no real movement on the price to the upside, even though the CCI is showing a bullish movement. So wait for it to break significantly higher to be more confident. And on the daily, we had a couple of, actually three bearish divergence drawn in there versus higher lows on the price, on the CCI versus lower lows on the price. Hit this support at 35.98. Let me just zoom into that one. Hit that support at 35.98, and since then it's bounced. Now, the CCI is pulling back towards its moving averages, so we possibly may see it fall further, but at the moment, still somewhat bullish on the daily. If we go to the intraday charts, again, bullish trades only to be taken based on the daily. You would possibly be entering, if it breaks above the moving average there on the CCI, taking a long position. That would have been there a long entry there. and you would have probably broken even or a small loss on that little trade there. There's never a 100% guarantee you're going to make profits, but it's always a good strategy to follow. Now here at the moment, it's pretty much the daily is weakening and the hourly is moving slightly to the long side. I'd like to wait for it to break above the moving average range of the price chart to go long. So KOLD is doing the inverse, bullish movement at the moment on the price, but no CCI bullish momentum on the monthly. On the weekly, we did have a very small level bullish divergence here on the CCI versus lower lows on the price, and since then it's bounced and still making further upside on both the price and the CCI on the weekly. On the daily, however, it's actually hit that resistance level a couple of times. It's actually hit it 3 times, a triple top off 85.10, and now it's currently in a bearish momentum to the downside, also below its moving averages on the price chart on the daily. Going to the intraday, we only take short trades based on this, but notice also the CCI is moving up slightly. So I'd like to see this break to the downside below that moving average on the CCI, and also break below that moving average of the price chart to go short. You can see there that did that during that period there, and another short entry there. And for UNG on the monthly, this one's got a CCI 150 on the monthly. It's in that medium or neutral range at the moment, within that moving average range, although the price is below the moving averages, so somewhat of a bearish to neutral positioning on the monthly. On the weekly, there's a bullish divergence on this one as well. CCI is moving higher with the lower lows on the price, but again, notice there's no move to the upside, no strong move to the upside to be more confident about going long. That's why I like to wait for these the price to break above the respective moving averages when the CCI has done its own movement above the moving averages. On the daily, it's hit this support at 12.57, bounce from there, has been in a bullish momentum, although the CCI is pulling back towards moving averages, so probably wait for a bit more of an up move to go long, but the price is also above its respective moving averages on that one, and there's no divergence to talk of on this one as well. Going to the intraday charts, again, long trades only to be taken. Now this one's been going pretty much sideways. Again, it's still below it's still in the medium range or the neutral range of the CCI, and also still below the moving average range of the price chart. So again, wait for it to break up above both those moving averages to go long, so long as the daily is also in a long position. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.